trading and investing made easy. Over the weekend, they're trying to convince us that they're going to settle this market, take care of the terrible bond market and stock market by going back to QE and doing zero interest rates. That's what they've been saying all weekend. I was watching the shows. I couldn't get more angry. That's not true. It's not going to happen. I'm going to tell you exactly why they won't have QE or zero rates. But first, remember, in a market like this, I just want to show you something. In a market like this, make sure you're working with stocks that have relative strength, that are going up against this tremendous S&P downtrend. See the difference? Here's one of my stocks, gold. Okay, see it? Now watch when I put SPY against it. See the difference? SPY is good. My gold has tremendous relative strength. Here's a little stock, Budweiser. See it? That's going up. Costco is going up. Okay, let me bring this back a little bit. Cost is starting to go up, but look at the S&P going down. Now, to the bond market. So just remember that. That'd be very helpful for you, okay, buy relative strength stocks. All right. The reason they're not going to be able to do zero rates QE is because the bond market, in order to do that, you got to have a tremendous amount of demand for dollars. And 2007 to 2008, 2009, we had tremendous demand for dollars. And why? Because dollars, all the countries around the world need to have dollars to buy oil and other commodities. But because now gold is so high, those people that sell commodities around the world say, give me your gold, give me your gold. So there's no demand for dollars. So you can't do QE. You got to have a lot of demand for dollars. So someone's going to say, well, we'll just do QE for the United States anyways, and we'll just print money for the United States. Oh, really? How's that going to work out? When you do that, what's going to happen, if you go print money, buy treasuries, okay, long-term treasuries to bring them in line with the short-term rates, do you know what would happen with your bag of groceries? Because there's no demand for dollars and you're doing it just to rig the market. Your $200 bag of groceries would be $600. That's why you can't do that. Okay, the inflation will be enormous. So please remember, there's not going to be a zero interest rates. As a result, this is what's going to happen right here. Here's your S&P. Look at this. Still, look at the money coming out from green to red. Look at that. And look at the downtrend, still in a severe downtrend. I think what they're going to do is still try to test somewhere up at the top here, because there's so many people who are buy and hold people. You know, they believe in the 60-40, 60 stocks, 40 bonds. They're not willing to sell. They think QE is going to happen, zero rates. I think the market's going to at some point rally up to maybe about 560, 65. Won't be able to break through. It'll come back down. It'll go through the low, and then it will capitulate. And we need it to capitulate to at least take half of the value away from these stocks because they're so overvalued. Then that's when we start finding some real good deals, okay? So for more information on how to follow me, including my charts, okay, learn how to sell short and long, comment the word stock below for a free 10-day trial. See you tomorrow.